Now, let's start the session, and let's get going, because what I'm gonna say now is I'll write it down in terms of notes here in the document. I want us to get a little bit more agile and a bit more. Now, the strategy that I'll be showing you tonight is a little bit more aggressive. It's a little bit riskier, but it protects your capital by having two things: stop losses and take profits in. So when you place a trade, you will place it with a stop loss and you will place it with a TP, so that you cover these two bases, because again, that's the way to trade when these volatile movement happens. So when the earliest confirmation that we can get on the move in these days is on the 15-minute, 20 and 55. So just to be on the safe side, I would be waiting for price action to cross both the 20 and the 55 on the 15-minute. So the way I am planning on executing my trades in the coming week is price action goes up above the 55 and the 20 on the 15-minute. I will put my I will go in. I will get in. I will put my stop loss below the most recent low. So I will put my stop loss below this, and I will place my take profit at the next level. So here I would enter here and then take my profit here. And this is, again, I would be watching this. We need to watch this, but it is a 20% trade straight off, and it's very quick to give you the profit. Then I would do the same for the next level. If I see it breaking into the next level, and I used to trade like that. I used to have that this level trading strategy. I didn't use it for too long because I switched to patterns and they worked out better in terms of profit. Patterns give you higher profits than levels. But I would have a limit order here as soon as it breaks this yellow line, because this yellow line is it's a super support and resistance line in this structure. And we have all of these lines, like we have the TA to back up this. So this would be a limit order. I would have it ready. I would put a stop loss below the yellow line. So the way to trade this is, and I would put it really, because I don't have a lower low here, so it's not like this reversal structure, because here it is a reversal trade, here it is a continuation trade. So basically this continuation trade cannot reverse. So I will place the stop loss here and then put my take profit at the next level right here. And here is where I would be waiting for structure, and I would be waiting for a double top. And again, for that, when here I would be entering. And again, if I'm watching it, because I wouldn't place a limit order here. I know this is decision line. This is a decision line. I wouldn't place a limit order here because this structure here is not mapped. Outside of this line, I don't have my map. I don't have local support and resistance. So here I would just be watching it, and I would probably enter in all honesty somewhere around here, just because I would enter market order. And when you enter market order and you're watching it, you're losing a couple of points. So no worries if it is a little bit farther down the line, and there is going to be a little bit of movement. And again, I would enter here based on this being a peak formation, and if it is a peak formation, that means it cannot go above this.
Yeah.
And yes, I could be stop lossed out, but if I am stop lossed out and I have to watch it again, I've already made my money here, 2%. Then I would have made here on this limit one another 2%, 40%, and here I might be stop lossed out for, let's say, another, I don't know, let's say 5%. This would be a really, really, really tight. Let me just measure it, because maybe I'm not approximating. Okay, it's less than 1%. So let's say I have to give back 30% of my gains, which is normal. It's called, Tino from Traders Reality calls it pay to play. I don't like the play element of what he's of how he's saying it, because it's not play, it's actually very calculated risk. But I like the fact that he emphasizes the fact that you need to put your capital on the table, you need to protect it, and you need to pay to protect it, because you'll also be paid if you win. So that protection will cost you, but it is a good protection to have while still playing this volatility. It's, again, it's an extra trading skill to have, rather than stepping back as we get closer to the breakout zone. And the breakout zone is on the daily channel, because this is going to be a daily breakout. So rather than stepping back and not trading this for 2 weeks and, you know, letting the trading skills just rest and become stale, we're adding another more aggressive strategy. Now, because it is a more aggressive strategy, I would say use very little money, as much money as you have to be adaptable and to practice these, especially 2 things: limit orders, so putting an order in knowing that it might get triggered, but you put that order in with a take profit, because this can be reached and then it can retrace if you're not watching it, and you've lost half of your profit. So have the limit in, and then having the stop losses in. So it's good to practice it with maybe half of your normal position, or even 30% of your normal position size, just to practice and stay adaptable in it. And again, not take an event like being stop lossed out as defeat, because it's not. It's strategy.
And you know, when you reach the top level, or what the top level that you were talking about there,
Here.
The next peak, the next peak's not been mapped out yet. You know, if you've got that, you know, that double top, say for example, at that point, would you consider them going into a short, given that it might retrace and down to the middle again?
Here.
At that point, yeah. No, sorry, but where to the left? You know, where you were before.
Here.
Sorry, no, to the left.
Here.
Yeah. So you come up, you've taken your profit.
Yes.
You're thinking that it'll go a bit further, but if it doesn't, and you see the double top, at that point, we were thinking that okay, it's going to retrace.
Now, personally, I would have traded this as a double top.
All right. Yeah.
I would have traded this as a double top. However, I would have been very careful about this here. So again, because we are trading the 15-minute, we need to be very careful and again, I'm a minimalist in life. I like minimal things, Lee. So I won't be giving you 10 checkpoints. I'll give you 4, but I'll give them, those are to me essential. So the 20 and the 50 here. So if I would have traded this short, absolutely, like my indicators say, bearish divergence, stochastic topped out, double top situation, happy days, I'm going into short, but it can't break the 20. It spent 1, 2, 3, 4 15-minute candles on this, and it's not breaking it. I would be closing my short here.
Okay.
I would be closing.
And how long would you give it? How many candles would you give it before you're thinking that's not going to go through?
2.
2. All right. Okay.
2. Now again, because I'm quite ambitious and I want things to go my way, I might be giving it a 3rd one. But 2 15-minute candles. Roy always sees me when I get when the trade starts getting close to my profit. I always start counting candles. I say, okay, this candle needs to finish. Give me another candle, and then I'll tell you what I'm doing, either closing or staying in. 2 candles on the 15 minutes. Okay, so just to sum it up here now, I'll put it here in the box. So the first thing that I would like to say is that this is a strategy for increased volatility. Now, increased volatility means we're taking profits earlier, and we're going in and out a lot more and a lot faster. So the first thing that we need to mind is go in with stop loss and take profit. Stop loss below the most recent low. For short.
Below would you put that? Is it literally, let's say from the Bitcoin perspective, like $50 or $20?
Say again?
When you put the stop loss in below the previous low, because I know that sometimes it can trigger your stop loss, but it's not even hit that price range. Sometimes it might be $20, $30 out. So would you put that say $50 below the previous low?
That's a very good question, Lee. Yes. Let me see where I put it now. Okay, because I generally go for liquidation, but generally I would give it enough space. So 22,821, $50. Yes.
Yeah.
$50 is perfect. $50 is perfect. And again, it might, even if it is a tight one, and you get stop lossed out, you watch, you check you always have your confirmation and invalidation in mind. Two, close position if MAs are not broken after 2 candles. Now, because it's volatile, these are 15-minute trades. So rather than trading the 1 hour, we're trading the 15-minute.
Yeah. And when you say the MAs, right, you're talking about the 20?
Yes. Yes, I'll put the signals. I'll put the signals in a different box. So this is, I'm doing the strategy. I'm doing the strategy now, and then I'm gonna do the box for the indicators and the signals. So go in with the stop loss and take profit. And 3, use the levels to take profit. Take profit. Take smaller profits more often. Now this is gonna be a great 15-minute swing strategy to practice, no matter the time. Now's a great time because the 15-minute swings are actually quite good. But it's nice to experience this stage in the market and to trade it. So we need a more aggressive strategy for this, and in order to be more aggressive and again embrace risk and thrive in risky situations, we need to manage our positions. So half of the positions, because you'll still be ending the week on a profit rather than losing. So the fewer emotions you have being so risky, the better. So go in with a stop loss, go in with a take profit, trade the levels. So put your take profits a little bit below the levels and close the position if you're if for instance you're trading this double top and it doesn't break the MAs, get out. And even if you have to watch it, even if you getting out doesn't mean that you are going into a long, because again it might be a triple top. So breaking this line here, if you're watching this line and you see 2 candles, so the line was broken, it wasn't retested but the second candle close above. Here I would go into a long. I would take my profit here. It's a small profit, but it is still profit. And considering I've only stayed in for a couple of hours, I wouldn't even be paying, because you pay the fee once every 8 hours. So it's a 15%. Let's say I'm paying a little bit, I don't know, 3%. I'd still get 12% from this. And again, it will add up, because you will have made maybe 12 here, 12 here, overall 24, but it's in the space of a couple of hours. You close your trading view, and then you can enjoy your day and come back to the charts tomorrow and still find swings like this. So take smaller profits. Hi Neil, we're talking about a more aggressive strategy to trade this volatility stage in the market, and we're talking about putting stop losses and take profits with every trade that you put in. And now I'm gonna give you the signals that I observed this week for entries for both shorts and longs. Now the signals are very simple. It's the crossings of the crossing first of the price action of the 20 and the 55 on the 15-minute. So for longs, crossing the 20 is excellent. Crossing the 55 is super excellent. This is where I would enter a long. Now, when the MAs cross, this to me is a confirmation. Again, because of my experience, I wouldn't necessarily take profit here. I would take my profit here. But again, that's my experience. The safer way to take profit is take profit here, see how it breaks this line, enter another long, take your profit here. So do it in 2 stages, because it is volatile, it can retrace and you lose your money. If you stay in from here to all the way up to here, let's say, even if it did go there, it could have retraced very, very quickly. So we are talking about making shorter trades, but staying on it. So really staying on the ball. So the signal would be, first, look where it is with reference to the 20 MA. So the 20 MA is the reference. The 20 MA on the 20, sorry, EMA, because it's more recent, it's more immediate, on the 15. So look where it is, as in what is the local trend. If it is above, that means it can continue going above. 2, if it is below, it can continue farther down in a short. Has it crossed the 55? If it has crossed the 55 EMA on the 15-minute, check to see that it is holding it. And holding it, which means 2 candles. So we are not, even if we're a little bit more, even if we're a little bit more aggressive, we're not throwing caution to the wind. 2 15-minute candles. So I'm not reinventing the wheel here. What I'm doing is I'm adjusting my signals for validation and invalidations, the one that I have for my 1-hour trades, to the 15-minute trades that I find to be more easier to follow and more productive in these swings. Because I've been in 1-hour trades and waited, you know, and stayed in and got trapped. So I realized something needs to be tweaked here. So 15-minute trades is from now onwards until we have the confirmation of the breakdown, the breakout on the daily. These are more adaptable. Has it crossed the 55 and has continued to hold it. So 2 15-minute candles. And then that's it. I'm not gonna tell you about the RSIs, because the RSIs in terms of volatility are a little bit messed up, and the stochastic is generally the one that will give us more immediate response. But even the stochastic, it's doing things like this. For instance, here the stochastic has come all the way down, which could be a clue for reversal, but then the regular RSI was nowhere near being down. It actually bounced off the midline. So do you know what? I will actually just make a note of the RSIs. But again, they can't be signals because things are too volatile. The RSIs don't work so well in volatility. In consolidation, great, but these games before the break, the breakout are a lot more volatile. House. And the regular. And the regular RSI midline check. You know, the way we have, I think I might have noticed, it might have told you that in one of our strategy sessions, the way we have trend lines on price action, there are trend lines and divergence lines and midlines and central lines on RSI as well. So for instance, this to me is a divergence line on the 1 hour. The midline can be a point of bouncing back into the same direction. So the midline can mean it's going to bounce up and do another leg up if it crosses the midline where it is right now. So you can have that mapped out as well on the 15-minute, so that you see how well that is keeping. Make sure that you have it nice and clear, because when you change your charts, sometimes when you change the time frame of your charts, the lines are not very clear on the RSI. So find, you know, I only map out occasionally the trend line of the RSI, especially for the divergence or for channels. Sometimes the RSI has channels as well, and I keep the midline very clearly in check. For instance, here in my short in Bitcoin, if I see right now, I'm quite pleased with how this is going, because it is below the midline. It retested it and it's continuing down. If I see the RSI on the 1 hour making another bounce up off the midline, I will be looking to see what to close maybe a part of my position or all of it, because I'm not willing to give it another leg up weight. So that was this was the main reason why I wanted to have the session with you tonight, just to see, just to check in with you, and then to make note of a more aggressive strategy, because I will be posting, for instance, more 15-minute information next week when this trade is over. Next week I will be posting more 15-minute information awaiting the breakout. So if we are next week in breakout territory, I'll probably do a 4-hour trade, and I'll keep watching it and watching it and watching it. If Bitcoin crosses the line out of that ascending channel upwards, I'll probably do a nice long 4-hour trade, and I'll stay with it probably to about 30 grand. That would be my target. 31k is my target. If this midline here breaks, to me, again, I'm looking to do a 1-hour trade, holding it taking some profit here at this midline, but then DCAing in if I see the lows being broken. So I will DCA in here, wait for the low to be broken, and then take some profit here, and again watch it, wait for this low to be broken, DCA when it's broken, and then watch for possibly a double bottom or the target of the daily channel. I still haven't checked the numbers yet because I'm not in the trade, so I don't want in that trade, so I don't want to overload my mind. But if we are in break upwards or downwards territory, then the trades I'll be making are gonna be longer. If we are still in this sideways small movement but volatile movement situation, I'll be doing more 15-minute trades, and you'll see me on the 15 minutes saying, okay guys, it's crossed the 20, it's crossed the 55, this is a nice time for a long or a short, set your stop losses here or set your take profits there. So I'll be a little bit more dynamic, and I wanted to communicate that with you so that you know what's happening. And if you want to follow, remember, decrease your position size so that you allow yourself to play another strategy. And this one is again more aggressive, more adaptable, but also more aggressive. Any questions about this?
Well, that's perfect. I think it kind of does everything that you know, I thought about before we even started. You know, about my trading over the past couple of days and getting a little bit muddled up and, you know, a bit confused about everything. So that's perfect from my perspective. You know, when you were talking about you know, DCAing back into it, you know, would you set those limit orders, or would you be watching it, see what it was doing, and then going in with a market order rather than limit order?
Again, like I would be watching it. So when I see, I would set my alerts on my phone, and when these bottoms are hit, I would be watching to see how they're hit, because sometimes I know I'll get an alert because my trade will take profit somewhere around here, so I know I will know that we're getting close to it, and then I will be watching for the two 15-minute candles at least under this line, and when those 15-minute candles are confirmed, I will DCA, but I'll keep my eye out for the 2 1-hour candles. So with a DCA and with this bigger space being opened, I would be looking for 1-hour confirmation. Because my entry point is higher, I can afford to DCA earlier and watch it. So I can. That's why I want to milk this position. So if I go in, let's say here into a short for this level, I would have an excellent position, 23.5. I would have an excellent position to keep. So even if I DCA greatly, I'll still be in a nice position above this white line. So what I'm trying to say, Lee, is I would get confirmation to DCA on the 15 minutes, so 2 candles being there, and I would put a limit order in, but because it's so close to where price action would be, it might execute as a market order. So that might happen. I don't mind paying the fees for the market orders, to be honest. I did notice that with the shorter profit trades, the 15% or the 20% taken, you do pay maybe 3-4% to if you close market and if you open market. So yeah, I think it's 75 plus the funding rate, 75 for each, 0.75% or something like that. I don't remember exactly, and I never keep track of that, although I know I should. But yeah, I would be watching to have that 1-hour confirmation, not just the 15-minute, because if I don't get 2 1-hour candles below this white line, I have my first red flag, and depending on how the RSI behaves, or depending on where the MAs are on the 15-minute, I would be looking to close a part of my position. Again, maybe not all, but I would be looking to take some measures. So I would have a red flag there. Does that answer your question? I think the internet has started to be laggy again.
You're back. I thought it was my internet.
I think it might be mine, Lee. The internet around this time becomes a little bit dodgy. Come on.
It was only for like 10 seconds or so.
Okay, so did I answer your question there?
Yeah, definitely. So you wouldn't, a little bit like, when we have the point.
I can't hear you. I know that the pages are frozen, but I can't hear you. Just gonna wait. Okay, I think I'm back now. Can you hear me?
I can hear you, yeah.
Okay. So Lee, I didn't get anything of what you said there. How you understood what I explained.
Yeah, so I get the differentiation between what you were saying about the pump that we had yesterday or Tuesday. I can't remember when it was now, if it was yesterday.
It was yesterday. Tuesday was the day I made profit, and yesterday was the tragedy day.
But yeah, I get the difference. So is it because it's the bottom of the channel that you wouldn't set the limit order straight away, or is it just because you want to keep the rugby confirmation?
Yeah, it's not because it's the bottom of the channel. It's where it is on the greater 4-hour pattern. So this is something I was talking to Neil and Michael about. I think it was last time. Yes. So every pattern, I noticed this in my pattern trading, and and Roy observed the same thing. So every pattern has 2/3 of the way, whether that be a channel, a wedge, a triangle, diamond, whatever. 2/3 of the way are consolidation. It's what happened here. It's what happened here and what happened here. So there was some volatility, but the swings, we had the space for the swings quite soon in the development. So after this line was here at this level and this touch, and this line was here here when it reached first, and then it had a touch here, and again I moved it slightly lower later, but it was a little bit higher. So the first 2/3 of any pattern are consolidation, and they're easier to trade on the 1 hour and the 4 hour. So you would have great 4-hour trades here, trading between these two levels, the top level and the bottom level. Great. And they're really juicy trades to make, because they're 4-hour trades, about 60-70% profit for a half of this. So the consolidation is great to trade on the 1 hour. When it gets into the third part of the pattern, because this is where we started getting caught, Lee. I was wondering, why did I get caught? And I didn't get caught once, I got caught twice. This week is the small trap, third time, because it is the third part of the pattern. So that's where volatility, so two things happened here. The range was expanded, so another level was added, and one level was taken out.
I see what you mean. Yeah, I think we both got caught in that one.
Yes, both of them. And I actually made profit here, and I cut my losses here. I retrieved all of my capital here, and I think maybe here I will have to pay 20% if I want to get out earlier tomorrow and not stay for the weekend. So that's what I anticipate this to lead to. But what I'm trying to say is the third part of the pattern on the 4-hour is where games start being played. And that's where we need to be as aggressive as the player that we're playing with. You know, it's a bit like playing chess. So we need to match the same energy, fight fire with fire, and we need to be a little bit more adaptable. We need to decrease our positions so that we don't risk as much, and then we need to take profit, continue to pay ourselves constantly, because levels may change. Like this did not go, imagine just the tragedy of going in here at this beautiful double top structure, thinking it's gonna go down all the way here, and then losing all your profits because it reversed in one 4-hour candle. It did a V shape, not even a double bottom. It did a V shape here. Sure, we were warned. There was a bullish divergence here. Momentum going up, price going down. However, this is the wisdom of hindsight. But imagine being in this 1-hour trade and not realizing that the levels have changed. Because we're staying now in the top part of this wedge and even threatening to break out. So this is where we are. So it's a different ball game for the third final stage of the pattern. And when the breakout is confirmed, and for this confirmation, remember this is a 4-hour wedge and this is a 4-hour trend line. It's been tested once, twice, 3 times. This is the 4th time it's been tested. I want to see 2 4-hour candles hold. So right now it looks like it's being back tested. If the next 4-hour candle is going to be a green one and it's going to go up, I believe we are in for this amazing target 2840, and I am willing to give away 40% or 50% now that I'm in the minus. I think 40%. Let me just check. Anyways, doesn't matter. Let's say 40% for 160%. I am willing to make this trade. It's like trading a knight for a bishop anytime, any day. So that's the game that is being played right now. So it is. We need to swim with the big fish now, and whatever direction they choose to go, we need to go too. But we need to keep our positions small so that we trade with fewer emotions, and we can close them. Or if we're not watching them, putting the stop loss in, because we don't want this to turn the other way around and be the pump of the century and get liquidated in a 1-hour candle.
I read an article this morning, and it was talking about the whales de-risking and using these pumps to sell off the positions coming out of the market, which you kind of think, well, why would they be doing that if we're expecting sort of a pump upwards?
I know, Lee. I know exactly what you mean. I listen to Cheeky Crypto, and he has his own algorithm of reading Glassnode. And despite the name, they're actually a super technical YouTube channel, and they do super technical analysis. And I love them for the Glassnode analysis. And the whales are de-risking, and his main argument for that is there's a lower low coming, and they are using this rally to sell. I had a revelation yesterday. Sometimes, sometimes I look at my mind and say, what a beautiful mind you have. And sometimes I look at my mind and like, God, you haven't noticed that in almost 2 years of trading, now is the time you see it. And I had a revelation about what happened yesterday. Let me change I've changed to Trader's Reality. There we go.
Well, I think the whales got in at the lows and they're taking profits now.
Yeah.
they don't get into the 2/3 of the last pump because that's the retail pump.
Exactly. That's it, Neil. That's you see. That's exactly what I wanted to explain to you. So this is where the whales bought. This is the whale, the big money, the market maker candle. I don't know if it's whales or sharks or dolphins, whatever they are. But here is where the retail candles are. So this is the whales, the market makers, pumping the market so that the retail goes, oh, great time to buy now that the prices are going up. So it's the market makers selling all the way down here. They're selling, and then they start selling here at the top massively to stimulate selling, and there'll be the ones buying all the way down. So yeah, I had the revelation yesterday. I saw it very clearly. I called it yesterday's pump a political pump, you know, because it happened right on the dot at 3:30 our local time, 1:30 your time. It was so interesting to see. So yeah, that's the whales are de-risking right now. But there was somebody on the, because I read the comments on YouTube as well. I want to see what people are saying as well. So they were saying that while whales are de-risking, not a great part of them are doing so. But I don't know, honestly, if that means something. But it
I
does.
think it's
Yeah.
my opinion is like the bounce from now to 28, 29 is the retail pump.
Yeah.
And then the whales will step in after that.
Yeah.
And then we'll get this in the stock market is like a dead cat bounce because like the macros are still negative.
Yeah.
But in bear markets you get these massive rally.
Yes.
And we're preparing for a massive rally and then capitulation down after.
Yeah. That's what they. I wanted to show you my SPX channel and targets. Yeah, that would make perfect sense. That would make perfect sense, Neil. That would make perfect sense. There's a lot of liquidity in those in these rallies, not these rallies. Now this is to start the technical part of the charts now, because we had the strategy and now the TA of the trades. The SPX seems to have made a recovery from where it was here, but I believe that everything has been maxed out in this recovery. So this is the daily, and the stochastic on the daily is at the top. If I am to look at this with the same eyes I look at my crypto channels, we've broken out of the channel, great. There will be a back test. To my mind, this is not there's great positive news in some publications. I've seen great bear market ends. The bear market is getting close to an end or something like that. Great pumpish headlines. Again, the market makers control the sentiment using the headlines. Now, to me, this will be a very good test. What happens here at this line, which is the midline of the Bollinger and the channel top line are very close together. Because if it bounces off this, it's gonna get to here, and we know that SPX and crypto is about 70% correlated. It's the same. They're correlated in the same direction. So this would be a 9.9% lift to the next level. So for Bitcoin, a lift to the next level, a 10% lift to the next level, which is where we are right now. If you're looking at our 4-hour structure for Bitcoin, we're back testing the 4-hour top line here. 10% would be 26. But I think crypto is going to be a lot more volatile than stocks. Crypto has a little bit more space. I don't believe this will stop until it gets to the next superior level of this, which is 31k. Of course, I'll be taking profits every step of the way, and then DCAing as the previous highs get broken. I'll DCA. So again, I think we're at a decision making point now. I don't. This is the 4-hour structure. To me, this wedge doesn't seem ready for breakout yet. Just the way our daily channel doesn't seem ready for breakout yet either. We haven't had a touch here to the bottom. Like this is a super channel. It's confirmed both the top line and the bottom line. I rarely see channels breaking out without having another touch here. And I'm not taking this swing into account because this is the swing it went in with. So I only take these two, this one and this one. So I am looking at the possibility of this coming down the way the SPX could come down, retest the midline and then bounce up. But I don't know. Like everybody's saying, first we see the 31 before we see the lower low. I'm not so sure about that, to be honest. I think for sure we need to see a low before we see the 31. But that's just my opinion. At the moment, I'm just watching to see which support breaks first. And at the moment, I'm looking for the levels to trade rather than these big moves until they confirm themselves. Yeah, so that's me. Like again, it's decision time for the SPX and it's decision time for Bitcoin. Just to give you a short overview. This is the daily channel. Top line's been tested again. Generally, when a line gets tested so many times, it gets broken. We've had plenty of back tests where we've turned this big red line here into support. Will we come back and test it one more time? We might, just to have this strong consolidation here and then break out upwards. And we will also have a triangle forming here, which is a natural formation. I've seen this so many times. In terms of the 4-hour momentum, it's turned it down. So the stochastic on the 4-hour has turned down. We have some rejection here, and we have, which I rarely see, the 4-hour reversal vector switched on. So when this happened previously here, look what happened, a nice drop to, let me switch on the data window. This is the 200. The 200 EMA on the 4-hour. We had a reversal to the 200 EMA on the 4-hour. This happened here, but there was a reversal down and then a reversal up. This one was really tricky to read. And just to show you another example of where these vectors happen. When they happen on at the top of the swing, they show reversal to the downside. When they happen at the bottom of the swing, they show reversal to the upside. So we have that in terms of the signals, the indicators, and again, I use Traders Reality as it's that in the MACD as my indicator, but this is definitely my shorter time frame. The MACD only for the day. So that's where we are, and we have fallen out of this wedge as well. This is a short-term wedge, but it is a valid wedge, and I believe it will have a nice target. And the target would be 23.5. It might come lower if the 23.5 breaks, but that would be the technical target of this wedge. In terms of the trades that were available this week, the ones that we planned on Monday. Where were we on Monday? I finding it difficult. Were we here? Let me think. We were here. Monday. What day was Monday? The first. God. Today is the 21st. Thursday, Wednesday, 31st, 30, 29, 28. 28. Monday we were the 28th. So Monday we were... No, wait. Guys, what date was Monday?
It was the 8th.
Thank you. Because we're the 11th. I'm reading the time now. I'm so tired. I'm so sorry. I'm calculating the date from the time. So, Monday was the 8th. We were... that's it. I have to switch to the 1 hour because that will be clear to me. So we were here. That's, I remember perfectly now. We planned this trade, and this trade matched, this trade came to its target. It took some time to hit this level, but it did hit it. Then it broke this line here, and this is the trade. This trade here made me have this talk with you about taking your signals on the 15-minute confirmation, because this would be a trade that I would miss out because I'm not taking my signals on the 15-minute fast enough. So I said, no, we need to take the signals on the 15 minutes. So level broken, one candle below level, second candle below level, get in here, get your profit here. It might not be big profit, but you get in here and you take your profit here, it's still 20%. With a little bit that you made here, between the 8th at 3 o'clock and the 9th at 8 o'clock 9th at 2 o'clock, so a day, and you might have made 30% in a day, which is good considering the market didn't offer too much more than this. Like it offered another maybe 1.5, but if the max offered is 4.5 and you make 3, that's okay, because you're supposed to leave 30% on the table. Here is where we... Yes.
I missed the beginning of the session, but just looking at your yellow lines that are quite close together.
These ones?
So the top, so the top one, is that just bearish divergence you're looking for and rejection from the parallel channel?
Here?
Yeah.
Yes.
Is that your indicator?
Neil, here is where Lee asked me if I were to trade this as a double top, and I said yes, because I would have 3 yeses here. I would have the stochastic maxed out, I would have the rejection, and then I would have this double top formation. And then I said, in all honesty, maybe I wouldn't get in right here. I would get in somewhere around here when I see the double top on the 15-minute actually forming. And I would have the bearish divergence as well on the 15-minute. And then, because this is a reversal trade and it's already done its double top, so it shouldn't get up there again, I would put a tight stop loss to protect myself from this.
And the midline, you're looking for a back test, but it didn't happen.
Here I wouldn't be looking for a back test, because this is a midline, and it might not be back testing the midline. This is a continuation trade. So this trade here, I would enter here where it crosses the 20 and the 55, and it holds them for 2 candles. I would enter here. I would put my stop loss below the previous low here, not this big one, the previous one, because it can't, if it breaks this one, it's gonna do another lower low, so it's dangerous territory. So put the stop loss here, watch it go up, and here I would watch at the midline, I would take my profit here, and then if it breaks the midline, I would jump in with a market order, but put a stop loss right below it, tight, super tight stop loss, not even 5% here, because this being a continuation trade like here and here, so along the midline we don't have so many back tests of the midline. It has to continue to the next level, because that's what it built up steam for. This would be a level 2. The level 2 is the longest one. So in level 1, it accumulates. In level 2, it just rockets. So here I would go in on a market order. That's why I said it's quite aggressive, with a tight stop loss, and then put my take profit here. I would not be waiting for all this jiggery pokery, no, hoping that it will get to here. I would take my profit here and then wait. Maybe trade this double top, maybe wait for this line to be broken. And when this line is broken, I will wait for retest, because this is a big support and resistance. And then I would take my profit here. It doesn't matter that it goes higher. I would take my profit here because this is the local support and resistance. Does that make sense?
Yeah, and the where we see like a third spike, is that would you read that as a wonky W?
A third what?
Where you see the third spike, which
This
is
one?
on the 10th. If you ignore the third spike, would you chart out that a wonky W or not?
This I would now I would chart it as a wonky W. Absolutely, it is an or a reverse head and shoulders. This is the head, these are the two shoulders if we're looking at them. But this would catch me out because I would the only clue here, if I weren't, again, if I were paying attention, would be the bullish divergence. So the bullish divergence here would be the one telling me this is gonna reverse. But it would catch me out here because it's so here.
But reading the W on the 15-minute, so if you zoom in around the 10th.
Here.
No, go a bit further. So we got that big wick candle is a rejection candle. Yeah. And if you zoom into that, I see that as a W, and then you set your...
Here, like this?
Yeah, and down. And then you've got W, and then you got your back test. And you're...
above the VWAP.
Yeah.
Yes, absolutely, Nia. Like that would be, if we are to have this clear hindsight mind on when we're trading all the time, we would be millionaires, which is my personal goal. I can't wait to have my first million. But this to me is it's hard to read because...
But if you turn on Traders Reality, I haven't had a look at this one, but would we have a green vector?
We might have had, yeah. We might have had. Let me see.
Just to give us an indication that we're
to have another yes.
Yeah.
Where was it? The 10th. No, that's July. I have a slightly different 10th, 4th of August, 5th. Here it is. There it is. Okay. It's in the wedge. Let me switch this on.
Do we have a green vector there to show some volume coming out of the structure?
We only have the blue vector here.
Yeah, it's too much sideways to even read it.
Yes, that's the trick. But we did have the signs there. Like we had this big bullish divergence. Like this is an undeniable divergence. If we keep things simple and if we keep things clear, this is a bullish divergence. However, this was at the top. So that was the odd thing that was going on here, because I believe that what was going on, I'm trying to jog my memory and realize what was I thinking at that stage. At that stage I was thinking, because I entered a short here, I entered a short. Yes.
Okay, to read this one.
Yeah, there even on the 1 hour, I entered a short here, because I saw the 1 hour, and I listened to the because I'm doing a 1 hour trade, I'm looking for the 1 hour momentum to tell me what's going on. So I know that the 15-minute can stay in the oversold or the overbought a longer time, or it can go up and down, but the hour was in the overbought. Same was the stochastic. So here I didn't have any signal in terms of volume on the 1 hour until this candle.
I think the only thing that we could have done here is just stayed away because of the news.
Yeah.
Because,
Yeah. The only thing that do you know what we could have done here, Neil? But again, it's hindsight. Stay out of the trade before the news, like the same strategy as the FOMC days. Stay out and then go with the market. Now, today, I back tested this strategy, and today this didn't work, because today we had this happen to the market with the CPI, I think it was
the news came out negative, but market didn't react as
the market pumped, dumped. Like if you look at the 5-minute candles, they're really funny. I was watching it live. So this candle went up, and then it came down almost from the top to the bottom of the wedge on Bitcoin, and then it actually made its way up, and then it did a double top and started reversing and came out of the wedge. So nothing major today.
I think it's just finding correlation between which news do we think that may have a bigger effect. So we know FOMC, like us, and then the rest of the news may be a bit of noise.
Yes.
Like today's one wasn't that dramatic, right?
Yeah. Today's wasn't, and you know what could have protected us here in terms of strategy. If I went in a short here, I should have put. Let me go back to the signals that I told you to use, because so if I went in a short here, 20,000, 23,060. So went in a short here, breaking above, and here's where Roy actually used the stop loss very effectively and was out of the trade and started shorting at the top of this. So brilliant for XRP. XRP didn't do all of this extra pump, so he's got a brilliant entry point in his short. So here I could have put a, oh, come on, both my brain and my hand are getting tired. I could have put a stop loss above this, and yes, it would have been a stop loss of I don't know, less than 1%, and then I could have put a limit order in here, because this is why we plan our trading days. This is why we plan our invalidations and validations. It's just that again, I need to do that, and I imagine you need to do that too, switching from the 1 hour time frame to the 15-minute time frame, and switching from market orders to limit orders, and having the limit orders in. So here having a stop loss above the previous high, because if it breaks the previous high, that means it's going to continue upwards, and having a limit order around the previous high with a stop loss below that level for the up. And
that, I'm just like I've thought about doing this, but the problem is I'm scared of the wicks. They sometimes like might wick the previous high, and then your limit order kicks in.
Yeah, but that limit order, when it kicks in, it needs to have a take profit, and it needs to have a stop loss.
Ah, okay, yeah.
So that's so that's why I wanted to have this session, and this limit, like, look, this stop loss is 0.23%. So very little, so less than 2%. It's nothing compared to the level of protection and the level of gains that it can bring. So when you place that limit order, put in the take profit, because the take profit could be a spike as well. Remember the Ethereum levels we had set, and we didn't take the trades because we hadn't switched to a 15-minute limit order strategy. And because we do have the TA is spot on, like the levels are there, the targets are met to a T. So why aren't we taking these trades, and why aren't we making money? Because we're too afraid that it might spike out. So what could protect us against that fear is knowing that our capital is protected with a stop loss, but also our gains are protected with a take profit. So we're going to get paid more frequently, and we're going to go in and out of trades more frequently, but we are trading all of this volatility. And if you have to do, Neil, if you have to do that with 10 quid next week, and if you can turn 10 quid into 20 quid at the end of the week, just getting paid 3 or 4 times a day, that would be brilliant. That would be another super skill for you to add to your skill set.
Yeah, I think it's like this strategy probably works around news time. So when we expect some news, we know that we could be shaken out, but then we could, we're prepared for the reverse as well.
Do you know when, again, I think you missed this part of the session as well. I don't mind repeating it because it's good to hear it over and over again. Remember when we were talking about last week how things change in the third part of the pattern? So 2/3 of the way we're grand, it's consolidation. In the third part of the pattern, whether that be a wedge, a triangle, anything, levels change. It's not that they're not there, but levels change and volatility kicks in because the space becomes smaller. So here, Bitcoin being this very technical, Bitcoin's great to trade because it's so smooth in levels, and it's easy to see these special, how can I say, moments. So from consolidation was here for from the 18th of June to the 13th of July, about a month. Great consolidation, nice to make money. Here, one level was removed, one level was added. Here's where the games start being played. Here, one level was removed. It only plays in this smaller space, but it does swing after swing in this small space. And it would be a pity to miss out on the profits here just because it's a smaller space and it is more volatile. If we do use stop losses and take profits, we can trade this. Do you get what I mean? Why this is happening? Because it's not only about the news. Remember that the news is what's his name? Steve Mauro, the Forex guy. He in his training, he's mentioning how the news is just a means for the market maker to manipulate the sentiment, but the market will go where the market should go. It's not where the news takes it. With or without the news, the market will go there. So the market will go to this space of volatility because the pattern is becoming more, is becoming tighter. And they make the pattern tighter because here is where they're collecting a lot of orders and a lot of liquidity. Think of all the people that have built up people, again, traders, and it's not only one or two people as in retail traders. I'm talking about professional traders as well, building up their funds here and then using more in this stage. So there will be a lot of liquidity. So it's a great way for the market maker to make money. But we can figure it out. It's a riddle. It's a puzzle. And
because the market maker is just a computer algorithm.
absolutely. Yeah.
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 Because we program them at work,
Mm-hmm.
and it's just like whoever gets there first.
Yes.
Yeah.
Yeah. And it's about adapting to each stage in the market. Because, for instance, 4-hour pattern traders, as a 4-hour pattern trader right now, I'm just waiting. I am just waiting, because this pattern to me is not complete. This line hasn't been back tested, so I'm waiting for the back test here to see if it holds. And if it holds, it's gonna go up for the 26 level. Though I am very tempted to make it a little bit more, a little bit wider, but I'll use this. So 26,000 level. So pattern traders, the 4-hour traders right now are, unless they went in here for this long, waiting for the back test, they would be waiting to see this confirmed, to see this back tested, and then there's the breakout from the 4-hour pattern. So yeah, this is where the games start being played. I hope it makes sense what I'm saying. I feel I'm repeating a lot of the same idea in almost the same words. Now, if this 4-hour structure, if this 4-hour wedge doesn't hold, I have very bad news for Bitcoin. If this comes back into this structure, I would be very tempted to leave 50% here for the target down, because this is what generally happens when, of course it's going to do a little bit of sideways here, but this is what generally happens when it comes back into the initial structure. It goes the opposite way. Anyways, I don't want to get too much into what's going to happen, because we don't know. We don't have any confirmation at the moment. There hasn't been any big thing happening at the moment. We're still holding above the 20 on the daily. Okay, so what else do I want to show you? So yes, we've had these two trades. Here would have been a trickier time to identify this reversal, and that is where I wanted to backtest the strategy before talking to you about it. Waiting for price action to go above the 50 and the 20 on the 55 and the 20 MAs on the 15-minute would have been a great idea, because that allows you to see the reversal. So here the 55 stopped it, here the 55 became the support. So you wait for it to break, to backtest, and then you can go into the long. And you know that long is going to be a good one because of all this test. So you can take your profits at the midline and then have a limit order for the midline to the top line if it continues. Okay, and then again, if you want to sit this one out and just wait for the midline, again, go at the midline with a limit order, place a stop loss. If you get stop lossed out, you get stop lossed out, but you need to take that risk in order to get the gains. You need to understand that risk is not don't have a negative relationship with risk. As traders, we need to not only embrace it but actually thrive. We need to have that positive relationship with risk. We need to see it as something that we have to do, and we have to take it, quite in an emotionless way. So that's if you were doubtful about this consolidation, this one clearly shows it. So breaking the midline, it's going for the top line. And then holding the midline here shows that it will do another lift. This here, I was telling Lee that I would be trading this as a double top anytime, any day, especially after this rejection. But I would close my short here because it's holding the 20. So in the coming week, if we're not in breakout territory by Monday, I will probably start doing the 15-minute trades, and you might see me say, okay, we're holding the 20 or the 55, whichever is closer, and whichever direction we're going, I'm closing my short. So you'll see me being a bit more active in terms of opening and closing trades rather than doing these longer 1-hour trades. If we are not in breakout territory. If we are in breakout territory, I'm gonna go with whatever the direction of the breakout is. These were the Bitcoin trades, and these were my notes for the strategy for increased volatility. And then I'll put out the recording for this session, so you'll get to hear it all. And these are the signals. So I'm not taking my signals on the 5-minute because it would be too chaotic. I'm still waiting for signals on the 15-minute swings. I'm just coming in and out a little bit faster. But I'm not recklessly going in and out on the 5-minute. I'm still waiting for a little bit of confirmation, even if that means leaving 30% of the gains on the table. That's perfectly normal. As long as I'm getting paid after each trade, happy days. That's all I care about, literally getting paid after each trade. Now let's talk about the trades for ETH, because ETH was a whole different beast. ETH had fewer levels, but it met them perfectly. And it also did a beautiful on the 1 hour and on the 15-minute. I think we had nice, and also we were backed up by the day. These two, this long in ETH, this long here in ETH, this should not have been missed out. This should not have been missed out. So we're holding the 20 on the 15-minute, we're holding the 55, we backtest them both, we hold them, we hold the VWAP. We have bullish divergence here, we are holding the support, we have so many yeses, and we have the next level that has been tested once, twice, almost 3 times. Of course it's gonna get to here. Here I'm taking profit. I'm putting a limit order here for continuation to this baby level. If I can squeeze another 10% out, I'll squeeze it. I'm putting, again, this would be continuation because this level breaks and there will be residual energy from this pushing it upward. So I would put a little bit of a stop loss underneath the green, a little bit of a stop loss. We put a stop loss, a little stop loss underneath the green line because this is a continuation trade. It cannot go below this, it has to continue, but take my profit sooner. Here I would probably short this and see that it's holding again, it's holding the 20, it's not giving up the ghost here at the 20 EMA. And if I wanted to consider this as a W, a tiny W formation, because it's the stop loss, the stochastic on the 15-minute here, maybe go for this level. But this would be, in my opinion, this would be the riskiest here. I'm gonna put it with a red because it's the riskiest. This would be continuation, so this to me would be very safe. Continuation trades are the ones where you're going with momentum. They are wonderful. I remember when I was trading levels like this, and it was a beautiful feeling to make money overnight. It was super. But I needed to reduce my position to have the confidence to leave that money in overnight. So let's say I'm looking at Ethereum and it's I don't know, it's made let me show you because this was the political pump. Let's say I'm going to bed and I see Ethereum getting above these two. And I say once it breaks the previous high here, I'm putting a please excuse the dodgy lines. I'll put a nice straight line here. You guys deserve nice TA. There we go. So here I'll put a limit order above this, right about here. I see Ethereum has been building up momentum in this little cup situation, head and shoulders, reverse head and shoulders. I'll put a stop loss below this line and I'll let it run to here. I would go to bed like this and sleep like a baby. And overnight, I would be making from here to here 22% with a stop loss of 5%. Risk reward ratio 1 to 4. Of course, I would put this trade in, but I would put it in with the take profit. I would put it in with the stop loss and watch if I go, you know, if I happen to wake up, or if it is during the day, watch it. If it is, if something, you know, if I can watch it. But this is a continuation trade. It builds up momentum here. It breaks the previous high or the previous low. Just the way, for instance, here. Let me give you another example. Here we have this neckline. I would go to bed very happily, putting a limit order here with the stop loss a little bit above, somewhere around here. And my next target would be about this level. This is the level that's most solid. And again, without looking at that trade, I would be making 20% profit. So these are not super glorious trades where I show you 60, 70, 170. No, these are small trades, but they happen over a very fast period of time, a couple of hours. You're only paying the fees once. So, and you're not risking too much because you are risking something, of course, because you have a stop loss. But that stop loss prevents you from, you know, going 20%, 40%, 50% in the red and then waiting for the market to turn your way. So these are small trades to be made step by step in this period where we are right now.
A quick question, Mahela.
Sure.
I haven't looked at XRP, but it seems like Ethereum seems a bit more volatile than XRP at the moment, percentage moves.
Yes, you are right. Percentage-wise, Ethereum has been the star of the show because Ethereum made a 7% pump and then a residual energy of 5%, so about 12%. But overall, yesterday Ethereum went up 13, almost 14%. So huge. Yes, Ethereum is the most volatile of the three because of the fundamentals that are going on. But just because I was trading it last week on Tuesday was here. Yes, here. Here I traded this short here, and XRP gave me, and I put the fib on it. I put the fib on it there, and I said, okay, 786. It gave me this in about, I don't know, an hour or so. Like this target, boom, reached 786. I didn't even have the time to check. So in terms of the spikiness, it's still there. In case you're thinking, oh, maybe XRP has lost its spikiness, it's still there. But Ethereum's the one making big percentages right now. I don't know if you've seen, there was a picture on Tino's Discord of how much liquidity was in Ethereum the other day, and they were the biggest, pardon my French, biggest balls I've ever seen. Like, I hadn't seen such liquidity pools ever since I keep looking at liquidity pools. Those were impressive. I'm going to look for that picture and see if I can find it. So there's a lot of liquidity with the fundamentals kicking in for Ethereum, and Ethereum has nice moves right now. Less sideways consolidation and more how can I say, bigger percentages. So I agree with you, to make the point. What else did I want to say on the topic of the trade? So this would have been the trickiest part because you're going into locally uncharted territory. Yes, you have this for a while. It's a support and resistance, but it is locally uncharted. This here again would have been a great W formation trade. W here looks like an ass. So W formation here. Let's say you want to go to bed and you see this formation and you don't know which way it's going, or even you're going into a meeting at work or something is happening, you're midday, you want to take a snooze, whatever happens, you see this, put a limit order here, because if it goes above this midline local high, put a limit order here, put a stop loss below it, and then follow it up to the next support and resistance here. So again, this would be a trade that's easy to make in these volatile times. It gives you your profit in half an hour, and your profit would be very nice. Here, this would be a 3.4, 34% profit. So do you guys get what I mean about this strategy? Like, today's session was less about putting the ticks, which is my personal satisfaction in this, but it was about explaining how to be more adaptable. Even if you're playing a riskier game, play it with less money, put the stop loss and the take profit in for your trades. Am I making sense?
Yeah, loads of sense. Just even the last part there, you know, where you're on the bum.
The bum. Yeah.
I've told you before about my obsession with getting the best possible entry point, and I'm always going to get it right at the bottom of the W or the M form, or top of the M formation, and then I think, oh, you've missed it, Lee. Mm-hmm. And really, you've not missed it. You can still get in on that trade, and I mean, it makes total sense.
Total sense, Lee. Like I told you, Roy sometimes calls me mercenary for this, but I like to be paid after each trade. So it doesn't matter if I see any slight trace of retracement. Let's say I'm in a short down here. I started here at this double top. It comes down, and here I see this, and let's say here I would see one candle above the 20. First red flag. Second candle above the 20, I will take my profits and watch it. I am not gonna risk my profits. 2 candles is okay. You're not losing too much. It's the I call it, you know, you have to pay the ferryman. waiting for those 2 candles is essential, because if you might be taking your profits too early, which happened to me. That was one of the first things that I had to correct as a trader, taking my profits too early. So I said, no, wait for 2 candles. One breaks the 20, second one confirms it. They need to be closed. And I was listening to Tino or reading something that he wrote. I don't remember exactly where I got this from, but he's of the same opinion. You're gaining better position or getting better profits or more consistent profits if you wait for that confirmation. So yeah, it doesn't I'm reading a book. It's more like a course, and it's called The Artist's Way, and it's a course about unlocking creativity. It's a great one, and it's talking about how perfection is literally like a knife to all that you do. And the author says, what would you do if you didn't have to do it perfectly? What would you do? And she lists a lot of things, that people prevent themselves from doing. So here you would be preventing yourself from taking profit because you're constantly waiting for that perfect entry or that perfect exit, which, let's face it, they do not exist. It's all about the levels. If it breaks this level, put a little stop loss. And even the stop loss and the losses that we make with the stop losses, they are part of the game. They're part of the money that we have to pay to get the gains and to protect the capital. I hope I'm making sense. I don't want to waffle too much.
No, really good. Makes total sense. It's that that perfect entry versus having the entry on confirmation. In my mind, it's like, well, I've lost X amount there that I could have traded. But really, in reality, the fact is that I never make the trade because I didn't find the right entry point. I didn't find, in my mind, the perfect entry point, so I don't get into the trade, and then I miss out on it all.
Yes. Yeah, and missing out on it all is the danger, because we, as professional traders, we can't afford to miss trade after trade after trade. So it's.
I did it before.
Say again.
Missed the perfect entry, and so didn't enter that short, and now I'm not in a short. Could have made some nice profit off that.
Yeah, absolutely. Do you know how I learned? It was switching to the 4-hour time frame that made me become more comfortable with not the perfect entry, because on the 4-hour timeline, I'm looking for bigger targets, and all I have to do is watch to see if this had been retested. So I wouldn't. There was a time when I wouldn't. I wouldn't put limit orders in for the 4-hour time frame because you need a bigger stop loss. So I would just be watching the 4-hour patterns. And if I see this, let's say I wake up tomorrow and this line has been back tested. Let's say I wake up tomorrow and I see this line being back tested and price action being somewhere around here. And I say, oh, look, I missed the back test, not going in. There would be a little voice in my head going, are you crazy? Go in, because you're going in for 50%. Sure, you missed this perfect entry here, which would have been textbook 20%. But here you have 40%, you leave 20% on the table. That's it. That's the 30% you leave on the table. But that practicing this, to me, helped with dropping the perfection or the exact entry point. No, this has been back tested. I can put a tighter stop loss because it has been back tested. So if it's been back tested and it's going up, I'm going up with it. I'll put a tight stop loss because it cannot come down. Like, this is the rule of the game. It cannot come down. If it comes down and breaks it after the back test, it's going all the way down. So I don't want to stay for that stop loss. Again, most of my trades are like that, but there are situations where I get caught. So I would, because it's a 4-hour trade, maybe I put more capital in. Again, I might be DCAing more around this time. So I would get caught at times, but I wouldn't stop myself from trading because I've missed the right entry. Never. I just check to see if the trade is invalidated. For instance, yeah.
Which was brilliant, thank you. That's what I was going to say.
Yeah, and this is for the longer time frames. So for the 1 hour, if you, for instance, here, because of where we are, here. Let me see what possibilities for trades you would have here. So Lee, here you would have a limit order. So let's say you want to go to bed tonight and you want to have a good night's sleep. I'll give you a challenge. You can put a limit order in, 5 quid, not more. Put a limit, put 5 quid in. If it breaks the 382, if it breaks 23,990, put it at 23,995, 6, 7, anywhere. You can even put it at the 382 because it's lower than these. Put a small stop loss, and by small I mean super small, like 10%. I don't know if it's 10%, but 10% max, 10%. Because once this again, we're going for a continuation trade, a level 2. Level 2 are the juiciest. So this is level 1 from the top to the neckline. Level 2 is all of this juice that accumulated here will be distributed downwards. So this should be the juiciest, at least to the midline. And I am conservative because again, it's a limit order. Put it here, the midline. And let's see if tonight you can make some money from here to here. If I were to put an order in, looking at this distribution, but wanting to go to bed, that's what I do. And you can make 16%. Just as practice.
Yeah, okay. I'll do it now.
Yeah, just it may or may not work. But if you get stop lost out for your 5 quid for 50, less, where I put it here, it's less, it's 5%, 10%. Let's say you give it 10%. If you give it 10%, that's it. You've given it 10%. But it's not the best risk-reward ratio. It's not the best trade setup. But for you to practice limit orders with stop losses, limit orders with take profit, that would be the next available trade setup.
Mahela, like,
yes.
Do you practice, like, in certain formations? I've done it in the recently. Like, we get to some peak formation, like the 7 a.m. I saw like or top bearish divergence. I didn't see much upward activity, so I increased my risk. Like, my stop losses are tight, but I used higher leverage. So I would say, like, okay, this is the amount of money I'm going to lose on this trade.
Yeah.
So normally I'll go in at 10x, but if I move the retracement down, I expect a 05 retracement. I expected a shorter retracement, but the amount that I risk will be maybe 1% or 2% of my 10x, but then I'll do a 30x. But
yeah.
30x trade, just so that you can capitalize on these like moves, but the amount you lose on the trade won't be as much, but you would probably make more on the smaller movements, given that like there's more yeses than nos.
Neil, I've tried 25x. I've tried 25x for about, I think, a month. I traded using the 25x to see how it was.
but not like all the time. Like I won't use like X all the time, like because there's not much room for error.
Yeah.
But at peak information, bearish divergence, 1 hour stochastic, like turning down the 50 minutes on the top. Would you break that rule there and say, okay, it's worth just risking like say $100 on a 25 or 20x? Or
My short answer is no. I wouldn't. Again, my experience with higher leverage wasn't a positive one because of the nature of my trades. Like I would do if I were to trade the swings on the arc, I would need space I would need space to not for stop losses, but for the swing to move. And maybe this is my psychology, maybe this is my individual psychology. I know that the money is the same, but being kicked out of a trade 3 or 4 times a day compared to being kicked out of a trade once a day is different. I think it sort of like gets you into a defeatist state of mind if that happens too often. But I know this is entirely me, and it might be my relationship with risk. I'm not saying this is, mathematically speaking, this is a good strategy. You could get in these times of volatility with smaller moves. Yes, you could make more profit and protect your capital. So you've demonstrated to me in what you said that you are protecting your capital, which is, again, I can't fault the way you're thinking. I can fault your reasoning. You are protecting your capital, but I don't do it. I don't do it. Short answer.
Is like I've done it and
Yeah.
and it's worked and it's not worked and you get stopped out and that's fine, and then you have to say you're not going to re-enter, because if you're entering it just messes up because then your emotions kick in. The problem is I find is chopping and changing becomes harder.
Yes.
So
yeah.
So like so you do a 30x and then you have to switch to a different time frame and be like, okay, I'm going to do a 10x. So it's just finding that that technique. So sometimes consistency works, right? Yeah.
I would say practice going in and out of trades more frequently these days and getting paid more frequently, which I know you have been doing. Keep your leverage where it's not getting to your emotions. And your emotions, the more you feel them, the more they give you a flag that something's going on. So the market is giving us a big variable in its volatility. If we add another variable to the mix, it's going to be very hard to control. It's a bit like driving fast on a very slippery road. If you drive slower on a very slippery road, then you're going to get there eventually. Smaller steps, but you're going to get there. If you drive fast on a slippery road, you might lose control at some point. But again, that, as long as you're protecting your capital, Neil, I can't fault it, because again, to me, it's all about protecting capital. The real fault that I would see is psychological, being defeated too many times or being in the red too many times, because we need to build, there's an emotional muscle, like a psychic muscle almost, that we need to build as traders, not caring if you're in the red. Like, I remember the first day when I was emotionless about being in the red. I can still remember that first day where I had a lot of money in the trade, and I was fine with it, because I knew that the market was going to reverse, and my 60 or 70% in the red was going to gradually become a green number there. But we need to develop that as traders first, before having to deal with the emotion of being in the red 5 times a day. Do I make sense there?
Yeah, no, I totally understand.
Because that will burn you out. You're going to put so much energy into your emotions and to holding them in check, that will burn you out. And I say, you can try this strategy, let's say.
Because the thing is, those trades, so I've done a few of those high leverage trades, but the 10, if one pays off, or like, not one, like, if like 3 pay off, you've covered like 20 trades.
True, but you've lost 17 times.
Yeah.
How would you feel psychologically losing those 17 times? I
won't do that on. It's just
I know.
That certain situations in the market where you see like formation, you're in an Asia section. Asia is gonna revert the market. Tight stop loss, $100. Might do that would be a $300 trade. Go to sleep and it's fine.
Yeah, absolutely. Like if you have a tight stop loss, Neil, I'm very how can I say? I'm trying to stay as how can I say, as impersonal, as long as you're protecting and as technical. If you're protecting your capital when you go to bed with 30x, do it. And you know what? Keep a record of it. Please keep a record of it, because that record will show you if a strategy is working or not. That record is the only thing that will show you what's working and what's not. You keep a record of your past 10 trades and see how much you've made from them. And then because it's easy for us to be human, like and I'm speaking that from experience, like I could be making great profit. I made 1x in 2 days this week, and I'm beating myself up for maybe losing 20% tomorrow. Because that's again, my Eastern European upbringing. Bit of pain hasn't hurt anybody, but it's the way our psychic works in emphasizing some negative. So if I put it on paper, I'll see it nicely and clearly that I've traded excellent this week, and I shouldn't bring myself down. But so is your strategy. If you put your strategy, your 30x trades on paper, and you see that they've been working, and at the end of the 10 trades that you've done 30x, you're still happy, energetic, still ready to trade, you're looking forward to trading, you're in a good place mentally after those, and you've made money, there's nothing wrong with it. You've just found another personal strategy to use that works for you.
Yeah.
So if you're protecting your capital, as you're saying, it's the high probability trades that you're talking about, go for it.
Yeah, generally it will be like 10x with room for the trade to play out, but on the 30x's is like, it may play out, it may not, but there's a high probability it will, and if it does play out, you're gonna reap rewards. Yeah. It's just that the peak formations you've got like 6 different things that tell you like, okay, we've topped out, rejection candles, it's worth the risk. Just putting a really tight stop loss and then do a 30x and just leave it, and then just and set your take profit.
Yeah, absolutely. Like I'm looking at these triple top formations, and yeah, absolutely. Like there are only a couple of them that would have, especially if you're watching them and you're going right on this line here or this top line here. If you're
it's only on the peak formations. I won't do a 30x on right in the middle of a channel, or it's just peak formations, like all the indicators are just like screaming that there will be a small retracement.
Yeah, absolutely. You've added another, if that works. So keep a record of 10 such trades. So 10 such trades where you go in like this. You don't need to write all the yeses, but just write the date, how much you've made, and then the next one, and then the next one, and maybe in I don't know, a month you have 10 of these 30x trades where you were super sure, and you've taken your money, and you have a strategy, another strategy, and you will see that you will go through different strategies and you will refine them, and you will pick out the one that works best for you in that particular stage of the market. And every stage of the market is different, so the more strategies you have, the better you'll be able to trade. I'll send on the I remember, because when I started trading years ago, I found these videos of she's a forex trader, a Chinese girl living in Canada, and she's one of the first traders that I watched on YouTube for the mindset that she has, and how she was showing how much she was making monthly on different trading accounts, and she was showing how on some trading accounts she was making money, or on some trading accounts she was losing money, and she was giving reasons why. So some strategies might be making you money, some strategies might be losing you money in the same period of the market. So that's where you need to be aware as a trader which strategy would keep making you money constantly. And the more you have, the more you can use. So I'm all for learning, Neil. As long as you're protecting your capital and you're learning, excellent. Any other questions? I always plan to have a short session with you, and then it turns into a 2-hour session. So I'll leave you guys enjoy the rest of the evening, because I've said all that I have to say. My main point was the 15-minute more how can I say, adaptable, versatile, more immediate confirmation. You'll see me pointing out the early confirmations on the 15-minute. You'll see me taking profit more often next week. If we're not out of the daily channel or back under the 20 MA on the daily on Bitcoin, you'll see me cue a more dynamic way of trading on the 15 minutes. So I wanted you to be informed and to have the chance to, discuss it with me, not just listen to it in a video. And to show it to you, because again, what happened this week was I was mentally and physically back testing this strategy to see how it works.
It was a really good session, Mihaela. I know that it went on for a little bit longer than what you wanted it to, but I think that's because we asked loads of questions. So
that's why I have these sessions, Lee. I love the questions. So
yeah.
always
really good.
Yeah, that's why it's all about giving you what you need where you are right now. Good luck with the trade, Lee. Good luck with the trade. Fingers crossed. And remember, in and out faster now, because we are in the volatility stage. We haven't had any breakout confirmed yet. Yeah, there's no breakout confirmed yet, because the daily channel is still the space that we're moving in. So yeah, good luck with the trade. I hope you make at least $1. Have a good weekend off.